Welcome to the Leaders in Payments podcast, where we talk to C-level leaders from across the payments landscape. We'll be discussing the products and services that impact the payment space today, as well as trends and predictions for the future of payments. We will also hear stories from our guests about their journeys to the top.
I do think that there needs to be an understanding of crypto as an asset class and then crypto as a technology, or I guess blockchain as a technology, right? That isn't just about speculation. It's really about trying to solve a real need that is just fundamentally difficult to do with the tech stack that we currently have in traditional finance. And so a lot of the things that I was really frustrated with at Google Pay towards the end of my time, which has to do with working with the existing infrastructure, was actually something that I thought could be solvable, right, with this new tech stack within the blockchain.
That was Sherry Jiang, Bluejay Finance, co-founder and CEO, and she is my special guest on this episode 241 of the Leaders in Payments podcast, and I'm your host, Greg Myers. Sherry not only has a very successful finance company, she also has a blog and a gaming group that caters specifically to poker players. In fact, poker is a personal passion of hers that she feels has helped her become a better founder. Bluejay Finance is a blockchain technology company that strives to make it easier for private investors to tap into private market investments, typically less accessible in the professional world. Sherry likens it to a crypto-based angel list, only for private market investments outside of venture capital. Sherry and I talk about her journey to the role of CEO, including the lessons she's learned when it comes to product versus people, testing, learning, and iterating. We also talk about where she sees the industry going in the next 2 to 10 years as it relates to mobile payments, cryptocurrency, and blockchain. We've got a great episode ahead, so let's get started. Hi, Sherry. Thank you for being here and welcome to the Leaders in Payments podcast.
Thanks, Greg. Excited to be here.
Great. So let's dive right in. Tell our audience a little bit about yourself, maybe where you grew up, where you went to school, where you currently live, a few things like that.
For sure. So I'm Sherry. I was originally born and raised in the U.S. Spent my life in different parts of the U.S., but mostly in California, and went to UC Berkeley for university, where I studied business. And luckily, because I was in the Bay Area from that time on, I really caught the tech bug in the 2010s. So my first job out of school was actually at Amazon, which then later became Google when I moved over there in 2015 or so. And I was able to work on a couple of different interesting products, but I would say most of my time was actually spent in this team called Next Billion Users, or basically the emerging markets team at Google. And so the idea is to figure out how you can build products that are catered towards the next billion users coming online from countries like Indonesia, India, Brazil, where you have different social contexts, different search behavior, different types of cash versus digital payment economies. So really just going user first in designing products for those markets very much differently than the way we may have done it for the Western world at Google. And so that's actually the opportunity that brought me over to Asia back in 2018. I moved from Silicon Valley to Singapore to work on the payments product for the India market. And that was a super exciting time to get into digital payments because it was just burgeoning at the time for Asia. So when I first started working on payments, I remember we were pre-launch actually for Google Pay, and we were trying to figure out how we could even hit 4 million users in the first year. That ended up being 13 million, which then ended up being 50 million by the next year. And by the third year, we were over 100 million users for Google Pay in India, which was really, really exciting. And I think it did really play out the whole like cash to digital payment leapfrog that happened in China, happening in India as well, just because the transformational improvement of using digital was just so much more than using cash, that you effectively skipped over credit cards, right? Credit cards and debit cards for the India market. So this experience really opened my eyes to the impact that technology really can have in terms of digital financial inclusion. I mean, I'm talking about numbers, but it was actually actually amazing to go to the streets of Bangalore and see like pineapple juice vendors, like these tiny stores, right? Actually accepting QR payments and accepting digital payments, which is really cool. But that really goes to show that technology really does have that impact down to the level of these street vendors, right, in India. So that's really where I kind of figured out this is a space that I want to dedicate a big part of my career to, furthering that kind of mission. And so naturally, I was really drawn to crypto or decentralized finance in 2021 because I was seeing how it was actually becoming possible to do some of these innovations in a much more composable, a much more modular way, where you basically have these developers, right? If you think about DeFi protocols, like they're taking a couple lines of code and executing financial transactions that would have been way more complicated from an administrative standpoint to do in the traditional fintech or finance context. So I was really amazed by just the potential for this new infrastructure, right? And so that's actually what led me to exploring what that next stage of financial inclusion could be if this is all done through a new stack within DeFi and crypto. And so that's a bit of my story. I'm still based here in Singapore. Using the mission that I had, I started a company here in Singapore called Bluejay, which I can get into in a minute or so. But basically, we're using blockchain technologies to make it much, much more accessible for investors to tap into private market investments, which are typically less accessible in the traditional world, both in terms of the type of assets that people invest in, as well as the places where they're located in, because cross-border investments across different nations can be quite challenging. So yeah, that's a bit of my background in a nutshell, but happy to jump into any area that, you find interesting.
Yeah, well, let's dig into Bluejay Finance a little bit more. So you kind of explained what it was. Maybe tell us sort of who the customers are versus the individuals or companies that are making investments. Maybe talk about the customer set a little bit.
Yeah, absolutely. So actually, one easy way to think about what Bluejay is, it's basically like a crypto-based angel list, except for private market investments outside of venture capital, right? So AngelList, I think a lot of people are familiar with. It's a platform that makes it possible for individual investors to invest in a startup with as small of a check size as $1,000, right? But they don't really have other investments like hedge funds or quant funds or private equity, private credit. The list goes on, but there's actually quite a few other kind of diversity of assets that you can invest in that are not in the public markets, but that's not what AngelList has. So this is what we are providing in a nutshell as a platform. Now, our user ecosystem consists of two types. I'll first talk about the investors, and then I'll talk about the borrowers or the asset originators. I think borrower is a simpler term. Asset originators, typically what's used in the finance context. But starting out with the investors, right? We're actually targeting more so individual investors versus institutions. And the reason why is typically for private market assets, these actually have been more so circling around in institutional networks for quite some time. I mean, if you talk to most family offices in Hong Kong or Singapore, I mean, they're pretty familiar with different asset classes, including private credit, because it's a high yield fixed income instrument that is a good diversification strategy within a portfolio of different investments that you have that may include things like, public equities or things like that. And so accessibility and being in the know about these deals for some of these larger players is not as big of a, I would say, challenge or a problem. But if you think about for individual investors, right, many times, even if you're an accredited investor, the hurdles that you have to take to actually invest in these is quite high to a point where most people don't even really know about it. I mean, it's just some numbers to share. If you look at even accredited investor bases, it's about 5%, 5 to 7% that have invested in what we call alternative assets, right? So it's actually not super penetrated from that standpoint. And one of the reasons why is because minimum ticket sizes can be quite large, right? So if you look at some of these opportunities, you have to be able to invest at least $250K sometimes, right? Now, if you're a fund and let's say your AUM is 500 million or $1 billion, I mean, $250K it's fine, right? That's almost money that you can invest just to play around or try out an asset class. But if you're talking about somebody who is an accredited investor who has has, let's say 3 million, right, in net worth and 100 to 200K of investable capital across everything, they're probably not going to want to put in 250K to one opportunity that they're just learning about, right? And so what we do as Bluejay is make it much more granularized to do these types of investments where you can even put in as little as $50, right, as your first investment, just to try it out. And so over time, if you're getting more confident around a particular asset class and want to allocate more, then that's entirely possible. And so that's the kind of user that we're looking at. Now, I would say like psychographically, right? Like what does this mean for individual investors? It seems like a very big universe of people. We're really focusing on folks that have hit like a certain point in their life where they have capital that they want to deploy and are actively seeking ways to deploy it, right? You can actually find a lot of people like this who, let's say, join angel syndicates because their startup just recently had an exit and now they have investable capital that they want to actively put into something that grows, right? So that's one example of a customer profile that we look at. Another one is if you're a tech company employee and your company just IPO'd, right? There's basically a liquidity event of some sort and you have capital that you want to allocate. And many times you're not going to just put these into high risk bets like stocks anymore. You're actually looking at a mixture of different investment strategies. I know I talked at length about the investor side. Let me actually talk about the borrower or the asset originator side now. So from an investor side, you think of this as fixed income because that's what you're getting when you're investing your principal and getting interest payments back. On the borrower side, they're basically borrowing capital for a number of different purposes, right? I mean, I would say the most straightforward example for like businesses is basically borrowing to expand business operations, to do more hiring, or to cover working capital needs, right? Let's say if you're a business operating in commodities or you have a trade financing cycle that you have to manage to, right? So they're looking to get access to more capital sources. And especially as bank lending is getting tighter and tighter because of some of the recent events, it actually opens up a whole world of this asset class called private credit, which is basically being facilitated by non-bank lenders, right? And so pretty much on this side of the market, anything that is less than 50 million in size is actually being underserved in the market to some extent. So these are mid-cap or even small cap companies that really do have these capital needs and quality businesses, but are not able to actually fit that kind of, I guess, sweet spot of size among the more traditional lenders. So that is the ecosystem that we have here with Bluejay Finance as a platform. And where I guess payments really comes into play here is that all of this is actually done on the blockchain currently. So the investments are made in stable coins pegged to real world currency. So again, these are not crypto assets that are being used for investments like Bitcoin or Ether, but they're like US dollar stable coins or Singapore dollar pegged stable coins that hold a value to a currency. They're being used as a vehicle for investment. And so that makes it possible for anyone to connect their wallet from around the world. You can be in Zambia, you can be in UK or Thailand and get exposure to these asset classes that have been typically reserved for large institutions.
Okay. So are your borrowers, are they typically fintech companies or do they range all different verticals and industries?
Yeah, so I would say there's a range for them. So we work with fintech lenders as well as credit funds as well. So I guess the difference between these two is the fintechs are platforms themselves, whereas the credit funds don't always have like a tech or website kind of layer. Sometimes to invest in them, you actually have to call up the team and then do it in a very old school way, right? So that's one of the differentiations between the two. But we actually do look at a pretty wide range of opportunities that are interesting. So they can span from financing for e-commerce tech companies, right? Since that's a really big space in Southeast Asia specifically. There's also quite a bit of traditional industry activity like commodities. So there is a credit fund that we've been speaking to before that is doing trade financing in this space. We have yet to bring some of these deals on the platform, but looking at some of the more specialized financing deals as well, like venture debt or distressed debt. I think those those encompass a slightly higher risk return profile than some of the other opportunities. But for us, really, it's about understanding what our investors want, right? So we run a lot of these deals by them. We speak to our investors, current and potential ones, just to get a sense of like what they're looking for. And we go out and keep our eyes and ears on the ground for some of these that pop up. Oftentimes, again, these are not things that are public knowledge or publicly available. So we want to make sure we're out there seeing what's kind of the best fit for people's kind of investment needs.
We've all heard the terms embedded payments or integrated payments. And of course, it's a huge trend in our industry. But the truth is, there's so much more to the story. So in collaboration with NMI, the fully integrated payment solution built to scale, we've launched the Be Solid campaign, where we're exploring embedded finance with guests from leading companies like KeyBank, Bain Capital Ventures, and more. To listen to the latest episodes, visit leadersinpayments.com or nmi.com/resources/podcast. In a world full of squares and stripes, be solid. So I'm curious, I'm a marketing guy at heart and from a background perspective. So you've got sort of the two-sided marketplace or platform, as you call it. Obviously, it's got to be a challenge to market to and find both the investor side and the borrower side. So how do you go to market? How do you find your customers?
Yeah, that's a great question. So I don't think there's always a one size fits all answer, but I can just talk about how we did it, right? And I call it the kind of like the ping pong effect, meaning like, you have to get one part of the market first in a small way, which then bootstraps and gets the other part of the market in a bigger way. And it kind of goes back and forth until you're able to capture more and more both sides of the market. It's easier to visualize this if I had a whiteboard, but let me maybe talk about it more in detail than just in concept. So we needed to get deals on the platform. It is quite difficult to talk to investors, customers without those deals, right? Just imagine if OpenTable were to do marketing around their platform, but didn't have like 10 restaurants there. Like it's just not possible, right? But could OpenTable get all of the restaurants in San Francisco to sign up for their pilot? Like probably not, right? So they got enough of them so that it looks like there's a product there. So you kind of determine what's the minimum supply side, the minimum amount you need on the supply side. And for us, actually, it was just about securing the first deal on the borrower side. So, we had a couple existing relationships in the market because the founding teams worked in fintech for some time. So we were able to call up essentially 5 or 6 potential fintechs to bring onto the platform. And then ultimately, we were able to secure a deal with a fintech based here in Singapore that does alternative lending for SMEs across Southeast Asia. They are a sovereign fund backed company with really strong investors and have had really strong performance with less than 1% in non-performing loans in 2021. So we thought that this was a good, trustworthy, high quality option to go with. And they were willing to essentially carve out a small allocation for us. We were like, hey, we don't know if we were able to raise 10 million, right? But we can try to go out and raise 100,000, right, as a start to make this allocation worthwhile for you. So then we took the deal and then went out to bring on investors onto the platform. Now, obviously, the first few customers were really people within our first or second degree network, right? That's a bit of where you start out a lot of the time, just like Facebook started out in the Harvard community where Mark Zuckerberg and the other founders attended school. So we started out with people within our first and second degree network as well, showed them the opportunity. They thought that was interesting. And then we actually were oversubscribed for the first opportunity. We actually filled up 100K in 8 hours. So there are people that were pinging me being like, Sherry, I was still at work and I didn't want to do it until I got off of work. But then I got home and realized that there's nothing left for me. So that sucks. I was like, we're sorry. That's one of the challenges, again, with the two-sided market, right? Because we were like, we had to figure out like kind of what the demand estimation was going to be. But clearly we were a little off in a positive way. So then we actually went out and opened up a second opportunity with the same fund, right? We went back to them and said, hey, a lot of people really liked what you guys have. Can we get another 100K? And that was really based on the commitments coming from people that weren't able to invest. So then we opened up another 100K and then finished up with 200K within our first couple of weeks. So that's a bit of the approach that we've been taking, right? So we have some case studies now around the first launch that went off very successfully. Now we're actually building out a little bit more of our investor base. And from there, we're taking more of a, I would say almost like community-based approach. If you've ever been in like different angel syndicates or see what different investment clubs do, it's a lot of like deal sharing. It's a bit of like educational content as well, because not everybody is necessarily as familiar with the asset class or alternative assets as others. So we're really actually building up the investor community side of things. And then once we're able to get a good sense of what kind of assets this community is really, really interested in, we can take our short list of a dozen or so other opportunities we've been talking to on the borrower side and figure out which ones to launch. So yeah, it's definitely a very organic process, right? And I don't think there's a one-size-fits-all formula for every single company, but this is at least how we've been tackling it.
Right, right. So you mentioned, there's a lot of opportunities for angel investors to find somewhere to invest. So what are you doing that makes your opportunity different? So what's your differentiator?
Yeah. So we focus on private credit right now as the asset class, right? So we say we're private market assets because, again, many people may not necessarily be as familiar with private credit as opposed to angel investing or private equity or some of these others, right? So to be clear, we're not an angel investing platform, right? I mentioned angel syndicates and investment clubs because they're the most easy to think of examples of that kind of community that we want to build, right? But the kind of investment behavior with private credit is very different than investing in startups, right? It's actually a much more passive income strategy. It's supposed to give you like high single digits to mid-teens annual returns. So it resembles like the returns you get from your ETFs without as much of the market volatility versus like, venture investing is much more, high risk, high reward. You sometimes expect to light your money on fire, but you still want to help out the startup in a way and be in the ecosystem. So the motivation and the risk profile is a little bit different. But what AngelList and angel syndicates did to this asset class back in the day was make it much, much more accessible for people to talk about, for people to learn, and for people to ultimately invest in them, right? And we kind of want to create that same kind of atmosphere or space for people to learn about all these other tools in their toolkit that may not have known before that they can use to help achieve financial goals.
You mentioned, obviously, in your career, you were very close to payments. And then obviously you're using some of that experience in your current business. But taking a step back and looking at the payments industry as a whole, kind of where do you see things headed, say, in the next 2 to 3 years?
Yeah. So I'd say in the next 2 to 3 years, we're just going to see this inexorable trend towards mobile payments, right? I think right now it's about 60% penetration for Southeast Asia. That's a number I'm most familiar with since it's my region. But I think this will near like 80 to 90% in the next 2 to 3 years. That means that there's just as many people that are using their mobile phone for payments as they are for messaging. So that to me is where things are going to be moving. So that means that anybody basically has a bank account in a way, right? If you're thinking about a wallet, it's not labeled as a bank per se, but it is acting like your bank account to some extent. So I do think that at least as an access point, mobile will get to that point where you got more and more people who are brought into the formalized financial ecosystem. Now, of course, there are still many ways that people are less banked, right? There's going to be probably differences in the types of services that you'll get once you're on mobile payments. But I do think that this is a first step in the next 2 to 3 years that will just be this continuous trend.
Yeah, and I can't leave this part of the conversation without asking sort of where do you think the future of blockchain and payments goes? I mean, obviously, throw crypto in there. I know crypto and blockchain aren't the same thing, but it's usually all together in the same conversation. So maybe can you speak to that a little bit?
Yeah, absolutely. So actually, this is maybe the thinking beyond the next 2 to 3 years or more like the next 10 years, right? I am very bullish about stable coins and crypto for payments, I do feel like in terms of mass market adoption, we're actually quite a ways away from it in the next 2 to 3 years. As much as I wish that we're able to be much faster, right? But there's some basic problems around account abstraction, like making sure that there's a way for you to like log in without using seed phrases and all these clunky UX experiences. All of that stuff I think still needs to be solved. I think accounting is a problem. Like if you're a business accepting crypto payments, sometimes accounting and then filing your taxes is just an absolute nightmare, right? And again, if everything were peer-to-peer with crypto payments, that still doesn't solve a big chunk of the kind of payments you make, which is to merchants, right? Buy a water bottle, buy your phone, you're paying a merchant. So that needs to be sorted out. So I would love if crypto and stablecoin payments were to get there from a mass adoption standpoint next 2 to 3 years. I just don't think it's quite possible yet. But I do think in the next 10 years, that is certainly going to be the future, right? So I believe like stablecoin networks are going to be the primary way to connect the entire world of commerce, of capital on one single compatible money rail, right? That's not the world we live today, right? That's why we have open banking APIs. That's why we have all these other initiatives to connect all these islands and siloed systems together, right? But with stable coins and with the blockchain, whichever, layer 1, layer 2, Ethereum, Polygon, we're not sure which one yet, but it'll be on one or a few of these different standards, right, for transactions. And so this will be super exciting. So if you think about our use case with Bluejay Finance, we're trying to create a seamless global platform for people to invest anywhere, right? So you don't have to worry about the fees you have to pay to move money back and forth if you're investing into another country. So somebody who's sitting in Jakarta can easily connect to and invest in a New York Stock Exchange, right? Or maybe somebody who has a fund, let's say, has certain ESG goals, can actually be able to seamlessly invest into an opportunity in Indonesia, right? That's addressing the solar energy market. So that's the part I think that's really exciting that will be enabled through having basically payments run through stable coins, tying the entire world together on a single stack, right? That's something that I think will take a little bit of time to develop. I talked about earlier, like some of the, current challenges that we have to work through before we actually get to that stage. But I certainly do think it is the future.
Yeah, I agree with you. I think there was some momentum around making crypto as a payment rail or payment device, but that has, I think, slowed more recently. But I agree, longer term, 10 years from now, I probably wouldn't ask that question. I feel like there'll be a lot of progress already made and people building and paying using all of those things that you mentioned. So I tend to agree with you there. Well, let's switch gears for a minute and let's talk a little bit about you. You sort of explained earlier your journey to where you are today, but maybe talk a little bit about the founding story. Everyone's always interested. You started this Bluejay Finance company. You're a co-founder. Maybe like, how did the idea come about? Why did you do it? Maybe give us sort of the backstory a little bit.
Yeah, I think that's a great question. So I actually met my co-founders in an accelerator program based here in Singapore called Entrepreneur First. It's like a pre-product, pre-team kind of accelerator, very different than a YC, where you just go in as yourself and you meet co-founders and then you start jamming on ideas together. And hopefully by the end of 13 weeks, you actually have an investable idea. So it's actually quite an intense experience, if you ask me, right, to get to that point in a short period of time. But I knew at that point that the startup journey was something that I really wanted to embark on. I essentially left my job at Google and had this in front of me to kind of figure out. So it was almost like there was no backup option, right? It wasn't like I was doing it on the side. It's like, no, you're going to figure out a way to make this work, right? So I think what's quite unique about my co-founders, Raymond, who's the CTO, and Jeff, the COO, is that we have a unique combination of different skill sets and backgrounds that I think really made this product possible. And that's actually one of the fundamental philosophies of this program called Entrepreneur First, which is like everybody has a bit of their edge and the product and the company could not exist without the combination of all your unique edges together. And so coming from a payments background and coming from the background of figuring out how to take tech and explain it to like the next billion users, right? That was a bit of like my edge. And I knew I wanted to work on something within the fintech or crypto space. Raymond has a background in software engineering. He actually was in the Singapore tech arm called GovTech and actually pioneered a bunch of their blockchain initiatives. So there's something called, I believe, Open Certs, but basically it's a project where educational credentials are put on the blockchain. There's another one called Trade Trust, which is basically trade agreements on the blockchain. But essentially, a lot of these projects that touched anything related to the blockchain within Singapore was actually pioneered by this guy, which is pretty cool. And then Jeff is someone who is from Myanmar, actually. He's done 2 startups before this, both in Myanmar. And he really comes from the context of growing up in a place where he essentially was less banked, right, than folks that are a little bit more privileged, like myself growing up in the US, and then Raymond growing up in Singapore. And so very like the problem space of financial inclusion from a tech perspective is something that is quite near and dear to him. So it was really the combination of all of our experiences that really brought us to the idea. So we did bounce around a couple of, I would say, users and technologies, which is, I think, if you ever, I can probably talk for 7 hours about the 0 to 1 journey as a startup founder, but you're kind of bouncing between, okay, product and market and product until the two kind of make sense together. But initially we were thinking about actually building a cross-border payments app using stable coins for migrant workers. So it was a very specific user and a very specific use case. So of course, we've evolved a few times through different ideas during the accelerator and then obviously until now, based on like iterative learning, really. So it was a combination of figuring out how big and commercializable a market is, because even if we do focus on a social impact, you do need commercial viability to grow. It's a combination of that, a combination of figuring out what is possible from a go-to-market standpoint too, because as a startup, you have limited resources and sometimes high cost per acquisition, right, to acquire your first few customers. And then also thinking what was possible on the product side. And so we worked through a couple of different iterations of what Bluejay is, or I guess what Bluejay was, right? So started out stablecoin payments, then went into more stablecoin platform. So less so on the application side, more on the platform side or infrastructure side. And then from stablecoins, then we got into more of the asset management side, because we realized that the use case for stablecoins is going to be, it's much more readily adoptable for this than it is for payments at this moment, at least from a 14-person startup perspective, right? With limited upfront liquidity to be able to actually manage payments between different corridors. So I know that was a bit long-winded, but I think if there's a couple of lessons I can take from here, I think number one, it's not about your product, it's really about your people and making sure that you guys are all collectively very good at testing, learning, and iterating, right? I think the second lesson is that no journey is really all that linear. And even when there are pivots, they do have some sensical explanation, but obviously don't do it for the sake of doing it, like pivot to an AI company just because everybody is talking about AI. Like, I think that's not the smartest idea. It's almost a natural, organic evolution of what you're doing, right? You're perhaps still solving for the same end user or same kind of thematic problem, but your approach is a little bit different. So those are a couple of things I learned along the way within the startup journey.
Okay, cool. I'm glad you shared those. So what are some things you're passionate about? So maybe a personal passion and a business passion.
Yeah, so I'll talk about a personal passion of mine. I am actually a pretty avid poker player, which I think comes as a surprise for some people. Maybe not, because I'm in crypto, and so there's actually, so maybe not. But it's something that I actually picked up during the pandemic. I knew how to play a little bit of poker, but I really did not know how to play like with strategy of any kind before the pandemic. But then, you get a lot of free time and you're really bored sitting at home during various lockdowns. And so online poker was one of the ways to pass time. Started realizing that I quite enjoy it. It's a good way to meet people. It's a very analytical game, and it's a metaphor for so many things in life, right? I think that learning how to play poker has allowed me to be a better founder, actually, because it's all about risk taking and decision making under uncertain circumstances. You're never 100% sure, or generally not 100% sure how something's going to turn out. You're going to make the best decision and you get a bad outcome. You can make a terrible decision and somehow get lucky and get a good outcome. And you learn to tell the difference between the two, right? And so that's something I apply a lot as a founder as well, because there are a lot of times when things don't work out, right? You and your team you've done everything that you can with the information that you had, and still something didn't turn out the way it turned out. The worst thing to do is to say that your process wasn't good, or God forsaken, like blame somebody for it, right? So I think that it's taught me a lot about like separating like those kind of decisions. So I think that it's definitely a very kind of applicable skill. So nowadays, I would say I play it, maybe like once or twice a week, but obviously times get really busy with running a company. So I don't always have all the time in the world, but I can sneak in like an hour game or so at night, maybe when things are a little bit quieter. But yeah, that's something I really enjoy. On the side, actually, I run a community of folks some in Web3, some in non-Web3 careers, but there's over 200 people in a Telegram group that I have that regularly play poker online and in person. And so it's actually been a really, really, really cool way to meet all types of interesting people. So yeah, that's one personal passion of mine. You asked about a business passion of mine. I also very much enjoy writing. There is a blog that I do on the side called The Long Thesis. I collaborate on this blog with a good friend of mine named Ivan. He's actually working at a B2B crypto payments company called Request Finance. So if you guys are ever looking for interesting folks to talk about B2B crypto payments, he's actually a very good guy to tap into for that. But we're good friends. We're also business partners. He lives in Singapore as well. And we use that blog to actually freely write about stuff that aren't related to our own companies, right? Sometimes I just want to, talk about something outside of credit, of private markets, etc. So we published this blog. We wrote everything from our analysis of what happened with Silicon Valley Bank and what are some of the lessons there. We've written definitely about some of the things that happened on the SEC front as it relates to crypto. So it's a platform where we get to speak a lot more freely about our views about things. And so it's our identity separate from our company, which is really nice. So I love writing. I try to write something every single day. Whether or not it goes out to the world depends. But at least every day I try to reflect on things that happened that were interesting, that were surprising or insightful, and just like try to make sense of the world in a way. So that's kind of my avenue for that. So between writing and poker, like that's how I try to organize the natural chaos in the world around me.
Gotcha. Though. Thanks for sharing it. Maybe we'll see you on TV in Vegas at one of those, fancy poker tournaments.
It is a dream of mine, actually, maybe in a few years when things are a bit quieter.
Great. Well, Sherry, we've covered a lot of ground already, obviously talking about you and your background in the company and sort of payments and the future of payments and crypto and blockchain. I think we've covered everything. Is there anything else you'd like to add before we wrap up?
I think that's probably it. I know, as you said, there's a huge spectrum of topics that were talked about. I mean, maybe there's one more thing I will just add here, right? I know that there's been a lot of just very negative coverage and, for good reason, because of negative events, of the crypto industry over the last year or so, right? And so there's a natural fear of, the scams, the counterparty risk, all of that stuff, right? And that's super normal. But I do think that there needs to be an understanding of crypto as an asset class and then crypto as a technology, or I guess blockchain as a technology, right? That isn't just about speculation. It's really about trying to solve a real need that is just fundamentally difficult to do with the tech stack that we currently have in traditional finance. And so a lot of the things that I was really frustrated with at Google Pay towards the end of my time, which has to do with working with the existing infrastructure, was actually something that I thought could be solvable, right, with this new tech stack within the blockchain. And so that's where I see a lot of the opportunity being, right? It's not about Doge or PayPay, which is the frog coin that is now popular, going up and down and, making and losing a bunch of money, but it's about actually defining what the future of money is really going to look like. And so it's an absolute privilege that I'm on this journey to figure this out with some very, very bright minds. I was very fortunate to be part of that evolution back in the 2010s with digital payments as well. So I'm just excited to see how this continues to evolve. And I do hope that in the next few years, we're able to regain a bit more trust in the crypto industry as a place that is really, truly trying to solve for real user needs.
Yeah. Well, before we wrap up, what would be the best way for people to learn more about Bluejay and get in touch with you?
Yeah, so we have our website, bluejay.finance. We also have a blog that you can probably follow. Best way is to find us actually on LinkedIn because we do publish a lot of articles there and content. And then for myself, you can follow me on Twitter. I'm at Sherry Yan Jiang on Twitter. I am generally pretty responsive on DMs if anyone wants to reach out to just have a chat. And then if you want to make this a bit more professional, you can always reach out to me on LinkedIn as well. I'm just Sherry Jiang. So those are different ways to get in touch with me and then ways to keep up with the company. And yeah, I think that's about it.
Okay. Well, Sherry, thank you so much for being on the show today. I know your time's incredibly valuable. So thank you so much for being here.
Of course. Thank you so much for having me.
Absolutely. And to all you listeners out there, I thank you for your time as well. And until the next story.
Thank you for joining us this week on the Leaders in Payments podcast. Make sure you visit our website at leadersinpayments.com, where you can subscribe to the show and where you'll find our show notes. If you enjoyed listening, please share on your social channels as well.